Greetings to all. I hope all of you are safe from pandemic. To start with, I will first introduce myself. I am Jayan Tandon and I take care of banking practice at Newgen. Today we are going to discuss an interesting lending offering for non-banking finance company developed on our low-code BPM platform. This will be a 20-minute presentation followed by 5 minutes of polls and Q&A. You can post your queries over question window and we'll answer the same towards the end. Broadly, what we are going to cover today is current outlook on NBFC segment. Here we are going to discuss broad level outlook and macroeconomic pointers which are going to reboot growth. This is going to be followed by priorities which NBFC must look to refuel growth. Then I would talk on Newgen lending offering, available product management functions and configuration, feature list for retail loan origination, collections and loan management system, and our value proposition. I quickly move to the next, that is current outlook of NBFC segment. And I would start by saying that 2020 has been an extraordinary year. On many accounts, it has been an year of facing, learning, and adapting to new unknown. For all businesses, including NBFCs, it has been a trajectory from growth to sustenance and back to new normal. The good thing is central banks across the globe have gone to neutralize the economic pain caused by this pandemic, and going in 2021, the impact of crisis is subsiding and economy is getting back on track. As per ICRA report, the NBFCs and HFCs are expected to rebound in FY22, and key segments which will drive growth will include personal loan, gold loans, vehicle loans, home loans, and microfinance business. With businesses rebounding and many green shoots appearing to facilitate growth, there is a strong need for NBFCs to enhance revenue and lower cost with strong governance and controls through flexible, agile technologies available to them. These technologies can help NBFCs to do product innovation by designing new offering for specific segment and geographies, leverage multi-channel approach to facilitate agent operations, redesign back-end processes to automate low-value, high-touch process, automate business rule and credit policy, provide method and flow for effective follow-up on delinquent cases, building risk and control, doing effective monitoring through risk and control framework and dashboard report, provide auditing, which can help in automating day-to-day transaction journey. So what I am listing down are some of the priorities, what we think the NBFC should do. And to do all this, Newgen has come up with a low-code platform on which they have developed retail loan origination system, which starts with mini lead management to the customer and his credit assessment and covers complete customer journey till disbursement. Then we have loan management system, which is basically a transactional system and takes care of all day-to-day transaction post disbursement. Then collection solutions, which is basically a delinquency management and follow-up solution developed again on our low-code BPM platform and uses AI and ML to do effective collection and segment the customer. Now, it's very interesting. First, I'm going to talk around what does a low-code mean and what is the underlying framework which is available. And I'll start first with the master definition. An MDM which allows business user to define product and different kind of sub-product variation along with its boundary values and help in tying these product lines to its scorecard using BRMS. All that kind of interaction can be built into our master definition. From this, I move to one of the important points, the workflow, which is generally the backbone of any business. Here you can help, and where the system helps or the framework helps in defining and designing forms with easy drag and drop functionality. And you can define multiple different processes for different product lines. I'll move to next powerful tool or the next powerful engine, that is business rule management. BRMS helps to configure business rule and logics which are extendable to multiple lines of business and helps in defining pre-eligibility and credit check, including most complex delegation metrics or scoring. And you can have multiple scorecards which are defined using easy configuration of the BRMS. Then we have process modeler. Again, that's a workflow which helps in defining down the process for the new lines of business. And it has got inbuilt integration and ready adapters to connect with ever evolving marketplace as well as social integration. It has internally customer communication management, again, a part of the framework where you can define different sets of documents, both dynamic values as well as static things can be defined over there. Then we have business activity monitor to monitor the activity and create reports and dashboards. Coupled on top of it is RPA, which can, automate any high touch, low value process. I move to the next slide. This is actually depicting what is our offering in the NBFC space. So if you see in the middle, it starts with loan origination. You have loan management system, and then we have collection system. All, uh, all of these modules are independently available for non-banking finance company. And we have LOS, LMS, and collections. On top, what you see is the configurable workflow management, business rule engine, master data management, document management, EOD engine, and repayment engine, which builds actually the backbone and creates the flexibility and scalability around all the three modules. Just to brief you, what does an LOS or loan origination does? It's actually a retail loan origination system having mini lead management, supports digital acquisition of customer, his credit risk assessment, cover customer journey from lead to disbursement, including any third party check, scoring, and credit assessment. Then we have loan management system, the loan management system which covers servicing of the loan, operations after disbursement like interest accrual, receipts and payment, rescheduling, deferment, etc. Even foreclosure and NPA provisioning happens out in my loan management system. I'll further dwell down on each of this module as we move forward. And then we have collection system basically, which is a delinquency management solution. Here, you can take follow-up action to be taken against delinquent cases. You can mark a customer, a hard bucket or a soft bucket customer, and various different things can be done or various activities can be tracked across what is being done by the collection. I move to the next and I'll show you how does our product management configurator or product management module looks like. So this is the common product management module, which talks to our loan origination, which talks with loan management system and collection as well. It has a product hierarchy where a business user can define multiple products like home loan, personal loan, gold loan, and different variants along with it. Boundary values can be defined at a product or at a sub-product level. And these can be attached to different, if you see at the bottom, there are different scheme IDs, which I have represented. That is rate of interest, ROI stands for rate of interest, credit scheme, collateral scheme, document scheme, and installment scheme. We have logically grouped each one of them, and we give the facility to, configure and tie these rate of interest and credit assessment basis a product or basis a sub-product. You can define one-to-one linkages between a collateral and a product, or one-to-many linkages can be defined. You can define multiple different kinds of document. Documents could be inward document, could be outward document, which can tie to a product or to a particular segment of the borrower. And further, it has got a strong repayment engine where you can define your own repayment schedules and you can have your own interest computation methods. This is our product management module. Now I move to my next slide, which talks around our transaction journey. The transaction journey, if you see at the bottom, it starts with the lead management, followed by the application processing, underwriting, documentation, and then further disbursement. Now, typically the journey starts with the quick data entry, and we capture the quick data in form of a lead with bare minimum data set, which could be through a mobile, could be a portal, or through even an online marketplace. It goes up into follow-up, gets qualified to be pursued. The data is further enriched in the system, and like his business and employment detail of the borrower are being captured, including his KYC detail. There is an income assessment which is being done. There are three different methods of income assessments. Basis the assessed or the declared income. There is the statement of account analysis which is being done. Once all these details are being pulled into the system, internal scoring happens. Internal scoring is user definable using the master definition and the BRMS. You can define multiple scorecards and then take the scoring against each scorecard, and this can be displayed to you, and it helps in the underwriter in the credit assessment. Then we have external processes like field investigation, valuation, which are being done and triggered at different stages. Even legal processes can be, legal, generally used in case of, title deed verification and all. That can also be triggered using the configurability of the workflow and can be attached at different places in the workflow. That is the parent workflow, which I'm talking about. Then we have delegated approval metrics, which is part of our configuration. Each NBFC or banks are going to have their own set of delegated financial metrics, and this is being done and can be configured. We have pre-approval process to give you in principle approval, and then further the document and the disbursements are being generated. Now I move to the next part, that is our customer onboarding and video KYC. That's a new feature we introduced, during our when we were, all in the lockdown state. We created this quick solution on our low-code platform, and trust we took only few days, I would say around a week's time to come up with this solution. And this solution can be plugged and played with any onboarding solution. If you already have an onboarding solution, fine with it. Else we can define your onboarding solution. Here it starts with the customer giving the minimum set of details. He actually uploads his national ID, tax ID, and normally the date of birth is either part of your national ID or tax ID. The documents get automatically classified. He can schedule an appointment using the calendar and can initiate, and the verification happens then and there, basis the details what he has submitted. The system has inbuilt capability to check whether it's a blacklist customer or through an AML check. His photograph is being checked against the video which is going to record, or during the appointment or the discussion which is going to happen remotely. And once that is being done, the system automatically flashes that with the results that the photograph match with the liveliness match, how they are conforming. Now I move to the next part where I'm going to show you how does a digital journey looks like. Now, typically, digital journeys are very short, and they are very single click and low touch kind of journeys. It normally starts with a self-service portal and using the agile platform of NewGen, that is flexible workflow, the MDM capabilities, and the product processor, which was defined earlier by me. You can define your own journey. And this is how, a typical digital journey looks like. Now, here you are capturing down or aggregating first the information or enriching the information either through OCR capabilities, or you can aggregate the information from financial aggregators. Once that's done, an online verification is being done, you can compute the eligible amount. This is already available as a part of our business rule management. The credit policy checks happen automatically. They define down whether this application is fit for moving straight through process or not. Once that is being done, the soft approvals are being given, and the underwriting happens, and automatically the case moves to the disbursement. So it is up to the business user to define what level of automation he wants to go in, basis the kind of loan they are giving in and the ticket size and the risk what they want to take over it. I move to the next part, that is our collection management system, and I'll give you a view around that. It is built on our IBPS ECM CCM platform and caters to retail lending, uses capability of both AI and mobile as channel. You have real-time interactive interface to agent, assuring each customer receives a unique experience, optimizing outcome of every interaction. It has a holistic 360-degree view of customer, including his past interaction, consistent and optimal action for customer across all channel. Advanced routing and escalation is there, and you can prioritize through rule management what kind of escalations to be done and to whom the case needs to flow in case there is any breach of turnaround time. Then you have mobility channel as integration and automatic collection processing communication, where you can record promise to pay, drive out inefficiencies and ensure compliance. There is a dynamic call assignment based on high probability, best contact time, risk assessment, and resource availability. So system has business rules which you can configure inside, and using all these parameters, the cases get assigned to different available agent and to make your collection more efficient. Normally, to explain the journey on collection starts with a data dump from the source system like loan management system or core. There are loans are being bucketed and classified against days past due, and the amounts are allocated to different collection basis the collection strategy of the organization. Once case is allocated, the collection agent start following up with client, which can be through IVR calling or through personal call to record promise to pay or broken promise. Once customer pays the amount, the same is recorded in collection system, and further the same is allocated to in core platform. The complete follow-up, including the geo-tagging, is available on mobile and on the workflow to facilitate field agents. Also, it has inbuilt expense reimbursement system based on the distance traveled by the agent. Any hotspot analysis, if there is any concentration of delinquent cases in a particular region, that can also be done. And system has inbuilt legal and repossession module, which is based on our strong flow. Normally, if you see, legal cases don't follow anything, a very standard process. Here you can define your own legal process and can move ahead. And this solution supports multilingual. I move to the next part, that is our LMS, that is the loan management offering. Now, this is typically a transactional system, and it facilitates day-to-day service of loans after the disbursement. Now, once the loan is being disbursed, actually the data moves from loan origination to loan management system. Here the loan account is being created and disbursement and payment file is being generated. System has internal processes to compute any kind of interest accrual, There could be various methods of interest accrual like 30 by 360, actual by actual. All these configurations are part of our product management module. And in that, you can do receipt posting, generate different kinds of repayment schedule. If you need to defer any kind of a repayment or reschedule or make change of the interest, that is also possible using the rescheduling capability. And you can define your NPA and the provisioning norms within the system. System has inbuilt accounting engine. Now here you can configure your own chart of accounts and can define your own accounting. You can stop billing, and normally the billings are not being stopped, they are being accounted differently. So you can define off balance sheet and on balance sheet accounting. You can define your own chart of accounts, and once those are being defined, they are being mapped to different events to facilitate event based accounting. As and when the accounting happens, as and when the event happens, the accounting get triggered in the backend. Now I move to the most important part. So all these three, that is retail loan origination, LMS, and the collection system, is our NBFC offering. They are developed on our low code platform. And I would like to say, just like analytics is important in every aspect, in both in origination as well as collection or analyzing transaction, and so is your low code flexible platform. And what Newgen provides is an agile, scalable platform coupled with configurable domain capabilities as a product processor. You can define and design and connect yourself. It has a flexible workflow capability to launch new products. Solution is defined on responsive forms, adaptable to different devices, and configurable persona-based dashboards. It has multi-channel capabilities and OCR capabilities to extract data and reduce data entry. Solution comes up with pre-built checks for error reduction and has API framework for third-party integration, have capability to integrate with ever-evolving marketplace. That's very important from a solution standpoint, because normally if you look at package solution, they take a lot of time, to code and create those APIs. It comes up with a framework where automatically the APIs get, for all the functions, the API gets created. Ability to automate, peripheral processes, that's very important nowadays. It is not just the main credit process, but your valuation, your legal, it could be as extensive process, and that has to converge to the main process. That kind of configurability is available into our lending offering for NBFC. Now I quickly move to the deployment options. The deployment options, I would say, are available are both on-premise and on public and private cloud. We can host your solution over there. And then I'll talk around all about our lending arrangement. We are a global company present across different geographies. We have strong presence in Asia, Pacific, America, Africa, and Europe. Some of the key market engagements, if I need to talk, are like Bank of Baroda, ICICI Bank, and VP Bank in Asia. Then America, I would like to say New York Community Bank. It's one of large banks based out of US, where they do both industrial as well as commercial and real estate lending. Then we have banks like Equity Bank, Eco Bank, which are based out of Africa. And they are again very large bank, and they have taken both our retail as well as commercial lending solution, including online account opening. And then we have good presence in Europe as well as Middle East. To name a few, we have worked with Quadrant, a large non-banking finance company which was into credit card business. Here we actually, had done or automated the strategy module, the complete, product variant definitions, and were developed over configurable workflow. So I move to the next part. That's again, it's talking about our banking footprint and footprint across different geos on different verticals, be it insurance, be it banking, or be it customer relationship management. We are there. So that's what sums up with our today's presentation. And now I open this for questions and polls. Thank you. Over to you, Ruchika.
Thank you. Thank you, Jain sir, for this lovely presentation. I open now the whole webinar forum for the question and answer round. Am I audible, Jain sir?
Yes, you are. Very well.
Okay. So I open the forum for the poll. There'll be a poll that will flash on your screen. I would request you to please select the right option, and now it appears on your screen. So I will just request all the attendees to kindly put in your option. You can select one of the options. Another 30 seconds before we move on to the first question, I'll request all the attendees to please put in the options over here. Great. Thank you everyone for polling right now. Uh, so the first question for you, Jayant, is this. Uh, what is the biggest USP of Nugent's lending management solution?
So I would say the flexible framework or the flexible framework which is available on which the system is being built. You can extend this to multiple lines of business. You can do the commercial real estate lending, uh, C&I lending, even the retail lending, all on the same platform. And it has got a very well configurable product definition, which allows you to define multiple products, be it fund based, be it non fund based. And it allows you to even automate your peripheral workflows and you can actually attach these workflows to the parent workflow. So I think
Thank you, sir.
configurability, yeah.
Yes. Sorry, please continue.
No, that's it.
Okay. Again, before the second question, I'll again put up a poll in front of your screen. I'll request the attendees to please start polling. You can see the poll on your screen. The question goes, is your present system scalable and agile? You have to answer either a yes or a no. I'll request all the attendees to start polling in. Do you consider your present systems as a scalable and an agile system? If yes, please press yes. If no, then please go ahead. Last 10 seconds. Thank you, everyone. And the second question for you, Ms. Jain sir, is this. What is the difference between the customer journey between for a bank and for an NBFC?
See, largely the journey remains the same. A loan is a loan. You would do a credit assessment, but the segment of the customer actually differs. Whereas the bank normally caters to the large segment of customer to whom you can easily give the credit. There is a credit footprint which is available. But for a non-banking clientele, the clientele or the segment is different. So you can always say there are clients which are which we don't have, say, declared income or declared assets, where you have to do certain level of assessment. This is judgment. There is a lot of you have to find out there is no credit scores which are existing. So the journey actually differs from, say, functionality standpoint. I would say scoring, how you score a customer, how do you evaluate a customer for his credit worthiness, that becomes important, and that's how actually the journey changes. And second part, on the field set, I would say mostly, NBFCs cater to vast geographical diversity, and they have to cater to, say, different segment of the customers. And here, the onboarding, how you onboard a customer, it's basically the agent assisted onboarding which happens. So you require applications and you require, functions which should help agents to support your business. And that, then the next challenge which is there is, how do you address quick credit for these set of people using the application, using the technology.
Thank you. Thanks for your response. Thank you, sir, for all the insights that you have shared today regarding NBFCs and the possible solutions for them. I thank you all the audience for sparing your time and spending your afternoon with us. So thank you, everyone. I hope you enjoyed it. You'll all get your transcripts and the recording shortly. Thanks. Bye. Have a nice day.
Thank you, everyone. Thank you.